Tesla is the most undervalued AI play in the market. I believe the AI component of Tesla could be worth 1 to 2 trillion alone. This is really the beginning of what is going to be just a massive stage of growth for Musk and Tesla. August 8th, it will be a historical day for Tesla.
Any idea when production starts, when we would actually see robo-taxis on the road?
Look, I think over the next 18 months, this is something, we're not talking 3-4 years away. I think this is the start of what's going to be not just robo-taxis, but when you talk about full self-driving and autonomous, Tesla is an autonomous AI company. It does disruptive tech. And I think we will be looking at ultimately a stock that could potentially double over the next 12, 18 months.
Winston just said to me, can you do a real deep dive on Tesla, not just as an automaker, but as a multifaceted tech powerhouse? And that's exactly what we're going to do. We're going to delve into the financial and strategic elements that might shape Tesla's future, including energy and robotics. Why? Because Elon is writing a new master plan for Tesla. To understand where Tesla is going, you need to actually understand master plan 1, 2, and 3. And to get the most value out of this video, Winston's also prepared for you a full valuation model, a spreadsheet you can download for free to give you our view on where Tesla is heading. Go to felixfriends.org/Tesla. It's completely free of charge. So let's get kicking off here with master plan number 1. This was in 2006. Elon Musk's first master plan aimed to revolutionize the automotive industry through these steps. 1, create a low-volume electric car, and that was the Tesla Roadster, which was intended to prove that EVs could be exciting and viable. 2nd, use the money earned to develop a medium-volume car at a lower price, and this led to the Tesla Model S, a more affordable and practical option compared to the Roadster, and then use that money to create an affordable, high-volume car, which led to the production of the Tesla Model 3, which significantly expanded Tesla's market reach. In addition, he wanted to provide solar power. And that goal emphasized that Tesla had a bigger commitment to sustainability and integrating Solar City into Tesla's business model. So promoting a huge transition to renewable energy use. Master plan number 2 came 10 years later in 2016. And in that, Elon expanded on the initial ideas and included something else, which was the solar roofs, right? Which seamlessly integrated with battery storage. And that was partially realized through the development of Tesla Solar and its solar roof products. He then expanded the EV product line to address pretty much all segments out there. So he wanted to develop vehicles in all major categories. That's sedans, SUVs, and pickup trucks, as well as public transport like heavy-duty trucks and that kind of thing. In addition, he wanted to develop a self-driving capability that is 10 times safer than manual via massive fleet learning. And Tesla's continuously developed and updated its autopilot and full self-driving FSD tech with the goal of achieving full autonomy. In addition, he wanted to enable your car to make money for you when you aren't using it. And the idea is for Tesla's vehicles to function as an autonomous ride-sharing vehicle, potentially generating income from their owners when they're not using it. Jump forward another 7 years and you get to master plan 3. And here Elon unveiled a plan that focuses on sustainability and achieving a scalable energy future. How? Well, shift humanity from fossil fuels to sustainable energy, all under the sort of banner of climate change. And he wanted to maximize the adoption of that sustainable energy by making products that people actually love and at the same time sort of make the world a better place. And to ensure that Tesla's products are the most affordable in terms of cost per unit of utility, he wants to build an EV and an energy storage solution that's actually affordable. Elon also wants to expand to scalable solutions beyond Earth. And that's part of a sort of bigger vision, multi-planetary living with kind of aligns with what they're doing over at SpaceX. Now, note that the gap between plan 1 and 2 was 10 years. The gap between plan 2 and 3 was just 7 years. The plan 4 is coming just 1 year after plan 3. So the speed of development at Tesla is accelerating massively. And there are two parts that I believe will be in this master plan, based on what Elon's been saying and tweeting or Xing, that I'm particularly excited about. Number one, let me walk you through the numbers and how that translates into a higher share price. And then we look at the actual valuation and also what Wall Street's doing about it right now as we speak. I'll show you the actual insider trades on Wall Street. So the first is Tesla's energy business. The revenue growth is astounding. Morgan Stanley just came out predicting that Tesla Energy will generate $7 billion in revenue this year, which is a 20% increase, and will outperform the growth in car revenues. And even more important, Tesla Energy profits will surpass Tesla Auto in terms of margins this year and can contribute $1 to earnings per share by 2030, which is very, very important. So from a valuation point of view, Morgan Stanley is saying Tesla Energy itself is worth about $36 per share. And in a bull case scenario, could be worth $60 per share. Now, is that going to get us to like $1,000 share price? No, not in itself, but there is quite a lot more to this. Cost reductions. So Goldman Sachs just came out saying that they believe vehicle costs, production cost, could drop between $5,000 and $7,500, which will make Tesla more profitable. So margins will increase, and we look at that in a moment when we look at the valuation model. And at the same time, Tesla is going to gain market share. If Tesla gets just 1% more market share across US, Europe, and China with new models, it could sell an additional 300 or 400,000 units annually. So it's not that hard to do, right? So how do you get to a valuation model from this? Well, before we get to the numbers, I want to tell you about the second thing that I'm incredibly excited about. Actually, even more excited than the energy business or FSD or new cars or trucks or any of that. And that is robots. So if you just look at the manufacturing sector, so factories overall, and you look at that, there are about 400 million workers in sort of first world factories, probably a little bit more than that. And if you replace 20% of those with robots, you would need 80 million robots. If each of those robots would bring you in $30,000 in rental revenue, sort of recurring revenue. So factories would pay $30,000 for a robot that was kind of serviced and maintained by Tesla, which would be vastly cheaper than labor, right? Because there are no insurance costs, there are no sick days, there are no vacancies. They're going to work 20-ish hours a day. They're going to maintain themselves and everything else. No unionization, no lunch. I mean, they can just work a lot more efficiently. That market alone would be 2.4 trillion in recurring revenue every year. If you then look at middle-class households, there are about 1.5 billion of those. Now, say 10% of them would employ a robot at home that would pick up the groceries, clean the house, wash the car, all that kind of stuff. Like basically a housekeeper that is a robot. Then say households would pay half of that, or the factory would pay, just because households have a little bit less cash, say $15,000 a year. I mean, if you said to me you can get a robot that does everything for $1,000 a month, I think most people in sort of developed countries would go for that. But we're assuming 10% of people go for that, so not that many. That would then be a 2.2 trillion market. So what's a realistic share of the market that Tesla could get there? I'd say 10 to 20% is what you would expect one of the major players in robotics to gain. And that would be, therefore, a revenue between 400-ish billion and 900-ish billion on the higher end, depending on adoption. So if you simply added a 7x multiple to that revenue, well, that would add something like 8.6 trillion to market cap. Now, that's kind of crazy, right? But is it? Well, if you look at Tesla's evolution here from a car company to leader in sustainable energy and potentially a giant in robotics, to me, it shows the potential for massive financial growth and market dominance because they've got the cash flow. And you see how he built this out. He built the Roadster. He took the cash from that to build the mid-range car, and then he took the cash from that to build the mass market car, and then he's taken the cash from that to, they're now building robotics and everything else and AI and FSD and so on. So with the aggressive expansion and the proof of quality of management and their ability to deliver, he could not just shape the future of transport, but also the future of automated labor, for lack of a better word, robots. And I believe that the 8th of August robotaxi presentation could be the beginning of the trend change on Tesla here, as people start to see Tesla as more than just a car company. But let's have a look at valuations here for a moment. And this file I've got on screen here, you can download this for free. It's a discounted cash flow model at felixfriends.org/Tesla. And don't look at the headline number here first. I want to show you how you can play with this. And I'm going to highlight the row for you, okay? So if you play with these numbers here, can we highlight these? I'll make these yellow for you so you know which ones to play with. This is basically just revenue growth. So this year, we're not assuming a lot. Next year, we're saying we're going to 18%. That's what analysts think, actually. And then we're going to grow a bit more, 30%, 35, 45, 48. And then we're going to slow down a little bit again, just because the future is uncertain and you don't know. And I'm kind of landing on a sort of a 25% growth here. So I get to about 1.2 trillion in revenue, which I think is realistic or possible at the very least. And the second part to this is margins. So EBITDA margins, profit margins. Again, I'm going to highlight this. And you can literally change these. So if you want to change this from 15 to 25, let me show you, that will have an impact on the price at the top. So you can literally just go in and say, I think they're going to end at a 50% margin, which I think is a little unrealistic. And that's going to increase your fair value there at the top because it's going to increase your profit pile. So play with those numbers. Now, I'm going for a 30% margin. Why? That's about Apple's margin. And I think that's a realistic number. I don't think it's like a complete pie in the sky number. Now, the next thing with that is, what's the multiple? And for that, to find that, you have to scroll down a fair bit. And you have to mess with these numbers. I'll also highlight them for you. So historically, Tesla is traded at somewhere between 3 and 23 times revenue multiples. So Nvidia right now is at 20-something, 21 or so times revenue multiple, which I think is a little on the high end. So let's just say it's going to be 10 times revenue multiple, then the company would be worth $1,600 per share. If it was 25 times revenue, it'd be worth $3,900, which is sort of the Cathy Woods, everything is going to be all right kind of valuation, which is a little aggressive. And on the bear case, we get to $1,400. Now, overall, this is a bull case scenario. I don't want to beat around the bush on that. This is assuming they're going to deliver like quite a lot. But play around with this and just see what numbers you come out with when you mess with these yellow fields. And I think it'll give you a better understanding of just what is possible here. Let me also show you what Wall Street's doing. We have access to, we call them smart money trades. Maybe it's a funny term for it. But essentially, we can see the dark pool trades and the big trades from Wall Street. And you just type Tesla in here, filter by it, and it'll show you live every single day the trades. You can see here 14 hours ago, because I'm recording this as the market's closed. And you see these are all bearish trades, right? Pretty much all. There's one bullish trade, but they're pretty much all bearish, 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 bearish. What you can also do is just sort them by the largest trades. And that'll show you here, these are like 79 million, 40 million, 39 million. These are big trades. These are options trades. So they have leverage, like a lot of leverage built into these. And they're all bearish, basically, very few exceptions. So I watch this to get a finger on the pulse of what Wall Street's doing every day. And when I set up trades, I think this momentum is going to change. You can keep track of it. Just the software is called tradevision.io, which is something that we build to give you access to Wall Street quality data, right? For tiny amount. There's a whole 1 month free trial to it as well. So you can literally enjoy all features for a month. If you like it, you like it. If you don't, never mind. And so that could be something you could get a little bit smarter with as well, just by getting access to this. So for me, overall, I'm turning a Tesla bull. I'm going to start slowly and gradually building up a position in Tesla, which I don't have right now, and enjoy the ride. If you enjoyed this video, if you want more Tesla news and updates, put it down below in the comments. I'd appreciate that if you let me know what you like or dislike about what we do generally. And if you enjoyed the video, you could also forward it to a friend. And I love you for tuning in. See you on the next one. Winston here just asked me, Felix, which of the AI stocks do you think is going to 10x? What's the biggest opportunity? And then he had to lie down because it was serious.